Hello, this is Jordan, and this is your Precious Metals video market update. This video is being recorded on the late evening of Saturday, August 11th, 2018. And in this video, I'm going to discuss the current outlook for gold and the gold stocks, as well as the US dollar. First, we're starting off with a weekly chart of gold, a weekly bar chart, and at the bottom we have the net speculative position, which is measured as a percent of open interest. And I like to do that because it gives a very consistent reading for comparison over time. And gold is obviously oversold. It's been struggling to rally in recent weeks. However, if you look at the last couple bars, you notice that while gold has not been able to rally, it has not made a new low. In the last couple weeks, it's held above what's strong support from 1200 to 1210, and this is a weekly chart here, and you can see that around that level, it's important dating back the last 3 or 4 years. It's also important on a monthly chart. So if you're looking at a monthly bar or candle chart, you can see that around that 1200 level is a significant level. So the fact that gold is oversold, it's coming down very close to that level. Sentiment, considering the net spec position, those are all good reasons why gold, I think gold is about to rally here. Another reason, which we'll get to in the next slide, the dollar has broken out to the upside, but gold did not make a new low. So that's finally a good sign for gold. The net spec position for gold is 6%. It's actually 5.6% to be precise. And that compares very well over the last several years, but sentiment is one thing, trend and fundamentals are another. So the reason why sentiment at the end of 2015, I mean, not only was at the lowest, we were basically at zero, where there was basically zero speculation in the market, but that was a point where fundamentals turned very positive. Real interest rates were declining throughout much of 2016. And so that's different versus 2013, 2014, and 2015 when sentiment, based on this data, got super low. So we shouldn't make the mistake and just assume, well, sentiment is this low, that means it's going to be, a repeat of early 2016 again. I don't see that because the fundamentals, in my opinion, I mean, this is a whole nother discussion, but they're not bullish yet. They're still bearish in my view. So the fact that sentiment is so low, it doesn't necessarily imply that a huge rally is coming. More so, it implies that there's limited downside in the very short term. So finally, as far as an upside target for this rally, I'm looking at around 1260, maybe 1270. There's really strong moving average resistance in the 1270. So if gold can close above 1230 or 1235 on a daily basis, it's probably going to reach 1260 based on that and a little bit higher. Now moving on, let's talk about the dollar. In my recent work, I've been talking about, I mean, if you've been following me for the last couple months, I've been talking about how the 95 to 96 level is very important for the US dollar. I show this band here of moving average resistance, which is I'm looking at the 20-month to 40-month moving averages and then a bunch of levels in between. I mean, this is a weekly chart, but I'm looking at weekly equivalents to the 20-month and 40-month moving averages. And the dollar obviously had this big move up from 88 to 95, and then it's consolidated over the last couple months. It's been a very bullish consolidation. It's held above the 200-day moving average. You can't see it on here, but it's about 91 or 92. And last week, the dollar actually, not a couple days ago, but the week before, the dollar actually closed at a new 52-week high on a weekly closing basis. Now, this past week, it exploded up, especially on Friday. And so it's up to 96.22. And so not only has it broken out based on, it surpassed that high that we had at the end of 2017. So it's obviously a new 52-week high, but it's broken above this band of moving averages, which it goes from, let's see, about 94.34 to 95.78. Most of them are 95.40 to 95.78. So the dollar took out all that resistance, and you can just go back early on the chart. You can see which I've shown with arrows, there's points in time when that band of moving averages was support or resistance. So Right now, we see there's measured upside targets based on the breakout of 98 and 102. So the dollar is looking very bullish, and in the big picture, that's not good for precious metals. It's a big reason why precious metals are really struggling and really falling apart, or starting to fall apart, I should say. I mean, gold notwithstanding, since it's held above 1,200 for now. So the dollar's broken out, and the outlook is very bullish there. Now let's move on to the gold stocks. And the gold stocks, they're not as oversold as gold. I mean, they are getting a little oversold on a very short-term basis, but they're not as oversold as gold. That's something I talked about in my premium update this weekend. The other thing is we're seeing this past week we've got major breakdowns in the large cap gold stocks. I mean, the Huey here, the Huey is only gold producers, so this doesn't have the strong royalty companies in it. It doesn't have some other of the stronger stocks in it, and that's why it's been much weaker over the last year or two. And you can see this past week, the Huey lost its December 2016 low at 162 to 163. So the Huey closed just below 160 on Friday. Over the last couple months, you can see a triangle there. That's a descending triangle pattern. The Huey broke down from that pattern a couple weeks ago. That pattern projects down to a minimum downside of 149. Potentially 146, and then if we're just looking over the last couple of years, where is the next strong support target? Looks to be at about 140. Now we do have a breakdown here, so this is not something you want to stand in the way of. If the Huey does snap back and retest the breakdown on a rally, that would be a great shorting opportunity. But other than that, I mean, this is a breakdown here, and as a bull, I mean, you either short it or you stand aside. I don't see potential for a big snapback rally here yet. Now this is my final chart, and we're looking at GDX and GDXJ. And GDX this past week it lost support at $21, so it's closed at an 18 or 19 month low basically, and you can see the trend line that I've drawn, and GDX has obviously broken below that. I think that happened 5 to 10 days ago, and the measured downside target from that breakdown is in the 16s, and we see this same potential downside target as far as decline in GDXJ because it's broken down from its triangle, and that projects down to a low of 24. Now, zooming into the short term or medium term, the next strong support for both these charts is the December 2016 lows, and those are about roughly 9% down from where they are now. So, in the very short term, it's possible that GDX and GDXJ could rally a little bit here and go back to the red lines and test these breakdowns. But if that doesn't happen, we're unlikely to see a decent rebound until the miners test those December 2016 lows, which are just below 19 for GDX and just below 28 for GDXJ. And again, that's about 9% downside in both, roughly speaking. And these are, especially in GDX, these are significant breakdowns. I mean, the market has been trading in a range for a long time, and it's broken to the downside. And so there's going to be a lot of selling pressure here. This is what we've seen in the last couple weeks. Really could just be the start of a lot of selling pressure. And we going back to gold, we know that gold's very oversold, and it's likely to hold 1,200 and rally. But if you go back and you look at major bottoms and the huge declines that miners had going into those major bottoms. If you look at the 2000-2001 period, well, the 2000 period, I should say, you look at 2008, you look at 2013, well, there wasn't a major bottom then, but you look at 2015. I mean, the point I want to make is that miners, when they're breaking down and there's a lot of selling power there, they can decline very fast and very strong with little regard for where gold is trading or how it's trading that day or week. And so anyone who's invested in or traded miners for more than 5 years, they can recall points where the miners really fell apart, and you look at gold that day or that week, and they were just falling apart regardless of what was happening with gold. So the point I'm trying to make here is, even though short term I'm bullish on gold, the miners are not oversold yet like gold. I mean, they're a little oversold, but I don't want to give all the data I have, but I shared some of this in my premium update. They're not close to being extremely oversold like gold is. So it'll be interesting to see how this dichotomy plays out in the short term. But I'm not forecasting a decent rebound in the miners until they test those December 2016 lows. And again, the breakdowns from these, the projected downside targets from these breakdowns are in the 16s for GDX and around 24 for GDXJ. So, given the way things are trending here and everything that I'm seeing, the outlook over the next several months is not bullish for precious metals. And if you go back to my last video, I said that this sector is not going to begin a bull market until the Fed stops hiking. And so I said that's likely sometime next year. So there it is. As a long-term precious metals bull, it's difficult to say, but look, you have to respect the price action. You have to raise cash, or you have to short the market at the appropriate points in time. So here and now, that's where we are, and you either have to stand aside as a bull, or raise cash and short it, whatever you want to do. But it's not buy and go long, especially GDX and GDXJ. That's all for this video. Again, you can follow all of my work at thedailygold.com. You can consider my premium newsletter there. It's only $149 for 6 months, and we focus on market timing, stock selection in the juniors. And if you want to know which juniors really have the goods and best potential, you can sign up for our service. And that's another point I want to make. Money is still flowing into the juniors that are making discoveries or adding value to discoveries. So there are pockets of strength in precious metals, but I really need to emphasize it's small pockets. And otherwise, if you're not in one, if your companies are not in one of those pockets, you really need to stand aside. So with that being said, I thank you for watching this video. I hope you enjoyed it, and I look forward to publishing another video update for you in the weeks to come.